The very first time I gave a professional consultation over Zoom in English, I was sweating. Seriously, I can remember that. I was tense, I was uncomfortable, and most of all, I was scared of not being able to bring and use the right words and give all the information that the client was looking for. Rules are complicated everywhere, and Italian ones are above the average in a bad way. So, trying to share the basics of our Italian tax system in a foreign language has been and still is very challenging for me. It all depends on your country of origin. Some of you may count on the fiscal year that is exactly the same of the calendar year, and some may have to deal with the April to March tax period, who knows. In Italy, we try to make it as one. Calendar and fiscal year are the same. And for this reason, the 103 days rule estimate is very easy to apply, or so it seems. However, if you become resident by the first half of the year, you're considered a fiscal resident retroactively from the very beginning. And this brings more complexity to your tax return, having to deal with foreign income and withholding taxes to be translated using the words of the international tax treaties in force. Even if in Italy you don't pay taxes on the go as you earn, like in the UK for example, you have to pay taxes as balance and, listen carefully, taxes on account. Okay, we agree it's not fair at all, but here the Italian Revenue Agency wants some payments on account for the current fiscal year. And clearly, if you overpaid, it may happen, they will give you the benefit of choosing how to use the extra amount paid. You can offset taxes to be paid, or you can simply ask for reimbursement. Unless you're pensioners and unless you're working for Italian employers in general, couples cannot file taxes jointly. But don't worry, the tax credits, tax benefits are still the same. To date, Italy offers a very long list of tax deductions, something you can use to reduce the tax bill or the taxable amount. Very often they come with a percentage. Very rarely you can use the 100% of your expenses. More likely it floats between 19% of the cost to 16% of the cost incurred. Depending on your fiscal position, Italy doesn't offer any ready-to-use service to file your taxes on your own. Yes, we have something for employees, but nothing for expats at the moment. However, for you, lucky people moving to Italy as new resident, there are a couple of incentives that maybe can give you a good reason to move and to stay long term. If you retire for work, maybe paying just a flat 7% on your foreign income is a good reason to settle down in a small city inside the regions of Italy with a population less than 20,000 inhabitants. If you're an employee or a business owner or a freelancer, potentially you can get a flat deduction on your taxable income up to 90%, 90, for 10 years. So in other words, you would pay taxes just on 10% of your income. And if you're about to become a high net worth taxpayer, making more than, let's say, 250,000 per year or owning assets abroad for 5 million or more, you can pay just a lump sum of 100,000 per year and set free from any other tax payments such as personal income tax or the wealth tax. Last information for beginners. Italy wants you to pay your taxes on your worldwide income and worldwide assets. So this is a very good reason why you should plan your fiscal move with the goal of minimizing the tax burden everywhere, not just in Italy only. And I almost forgot, when you pay your taxes, you must use a special form to include every kind of state, federal, and local taxes. It's called F24. You can pay cash up to 5,000.